Okay, guys, sorry about this, but my mic was on mute, so uh, I'm just going to repeat it one more time. My name is Muhammad, and I teach. I teach professionally. I teach investments, right, to different to my clients, and I used to teach. I still teach but to a limited extent, corporate finance to university going students, and but now, since investing is my thing, it's I'm really passionate about the subject, so I plan to just focus on teaching investing, right? Specifically, stock investing, or any basically the investing that I teach, uh, basically is for any cash generating asset, right? So it could be real estate, it could be it's stocks, it could also be bonds, right? Any cash generating asset. Uh, Although my specific focus will be on stocks on the channel most of the time, but please understand that the topics that I discuss, they can be a lot of that can be applied to any cash generating asset, right? So it could be a non-public, it could be a private business, right? Share, of course, stocks are there, and then real estate as well, right? I'll be sharing some of my experiences on the channel, right? Because I myself, I don't only teach. I actually, much before I started teaching, I had been practicing investment management by myself and some close family and friends, uh, whom I were providing consultation services, right? And so yeah, I have basically have I basically have a bit of somewhat of a track record when it comes to stock investing, right? Um, and real estate, right? I've been investing in real estate as well, and on this channel, I plan to share my experiences with you guys. Uh, so in today's in this live session, I'm going to be, of course, if I get people on the channel, I will be addressing your questions. Uh, but while we wait for people to show up, and please understand that this is the second time I'm streaming, so it might take some time for the audience to show up. But what I'm going to do is that while waiting, uh, I'm just going to go through I'm going to share some content with you guys. I'm going to share some concepts and ideas, so it helps you build. It helps, so I'm able to provide more value for you guys, right? So these videos, these live sessions, they prove to be quite valuable. Uh, so yeah, now, before I go to, I basically have a. I'll be sharing my screen with you guys to show you a stock that I just recommended some time back, right? And we basically we made a decent amount of money in just 2 months, right? So the stock is already up around. I would say around we're up around 36, 37% in just 2 months, right? And please understand that uh, this is not day trading, okay, or stock trading, as because once you guys, those who know what they're talking about, people, and especially if you follow the legends, you would realize that day trading is not the way to go, right? It's, in fact, it's a short way of losing money, right? Because there's a saying that if you do something along the lines of, if you day trade, it's not a matter of it's not a matter of if, it's a matter of when you're going to lose money, okay? So you are going to lose money, and if not today, then if not sooner than later, but it's going to happen. So I highly suggest that you guys do not get involved in any sort of day trading. It's not it's counterproductive. It's quite counterproductive. So do not, and it destroys wealth in ways that you have no idea. I mean, I've seen people lose money, wealth that was created. I won't take any. I'm not going to point anyone out, but trust me, I personally know someone quite well who inherited a significant amount of money, and just because due to, I would say, due to lack of a better word, due to greed, they just instead of investing, they speculated, right? Please understand, most individuals especially, they think they're investing in the stock market, but they're not. They're actually speculating, okay? And speculating is very, very different from investing. I'll go into that. But please understand that I do not day trade, and I do not recommend day trading at all. In fact, I'm highly against it. I cannot emphasize on that enough. So do not day trade, okay? And if you're into day trading, then I would suggest you guys go look for other channels, because that's not what you're going to find over here, definitely, right? And to just while we're on the topic, I'd like to point out that I am basically a fundamental analyst, right? I'm a trained analyst. I studied finance, and I've been doing this for a long time now. And so although there is technical investing, please now just while I gave that disclaimer, it's also important to understand that there is technical investing, charts and everything. There is certification for it for CMT. While there is value in it, but please understand that, in my personal humble opinion, technical investing or technical analysis is basically there to support fundamental analysis, right? So you base your investment decisions based on fundamental analysis, and then you support it through technical analysis, right? I'm not a technical analyst, so I won't talk about it. I do not study technicals. I do not study the markets, what the market is doing, what the economy is doing, right? What's happening in the global landscape. I will focus. Yes, economic factors do impact businesses. Please understand that, right? Because although economic factors are going to impact businesses, however, it's a much better idea to just start studying the businesses, right? If you learn fundamental analysis, and you are looking for, you start going through the companies, right? Especially like if you understand how to study and analyze financial statements of different companies, you will be able to identify businesses, right? Of course, businesses which have a track record. Let's say a business has a 10-year track record, historical track record. You will be able to see how that business has been performing through multiple business cycles, right? So, of course, the business cycle or the economic cycle is like a boom and a slump, right? That's what happens constantly. The economy is constantly in flux, meaning that it's going through these cycles, booms and slumps. It just keeps on happening over and over again, right? And so the business cycles or the boom and slumps, they are going to impact the individual stocks, but I personally think that it's and as does Warren Buffett, because the legendary investor Warren Buffett, of course, I'm sure you've all heard about him. And if you go through his Berkshire Hathaway annual reports as well as the annual meetings, he has said on so many occasions, he has mentioned on so many occasions that if he had the chairman of the Fed, right, the Federal Reserve, whispering in his ears what he was going to do next, he would still not change his investment decisions, right? Because he said yes, and of course, now that's not to say that there's no value in it. in knowing what's going to happen to the economy in the future. But the fact is that it's relatively much more difficult, and very few people are able to do it successfully, right? To be able to judge what's going to happen to the economy over a relatively short period of time. Now, please understand that there are some people who are able to do this, but they are very far and few in between, right? So, with that out of the way, I'd like to now coming back to our discussion, today's discussion. I will. And yeah, so please understand that no technical trading on this channel, only fundamental analysis, and yeah. So and to bring more value to you guys, I will be discussing different topics, right, on the channel. So ranging from fundamental analysis like financial statement analysis, or the income statement, the balance sheet, the cash flow statement. These are the three financial statements through which you are able to analyze the business. I'll be talking about those. Then I'll be talking about valuating, how to value a business, right? Business valuation, how to value the business, and of course I'm going to be talking about investment philosophy. Now this is an area which I think that a lot of the CFA community lacks. Okay, CFA charter holders, in my personal opinion, although nothing against the program, it's a great program, but I still think that it mostly focuses on technical stuff, right? The technical stuff, and not on the philosophical stuff, right? And I'll be going in that in a lot of detail on this channel. So yeah. So, and by the way, if you have not subscribed to the channel, I'd highly recommend you guys subscribe and hit the bell notification so you guys get notified every time I upload a video, right? So anyway, with that out of the way, let's get into today's topic. Today I'm going to be looking at one of my personal investments. I just recommended this this investment to one of my clients. We went through it. We were actually I've been providing consultation services for a while now, and we research stocks together. And so this is one recommendation that I shared with them. And today I'm going to share a little something about not everything, but so some information, of course, enough information for you guys to see the value, to provide you value, right? You guys are it's amazing that you guys are taking your time out to go through my content. So I want to provide the maximum amount of value to you guys. And so in this video, I'm going to share some of the reasons. I'm going to show you how I basically selected the stock, right? Please understand that there's going to be some technical language involved, right, from a financial analyst perspective, but I'll try to keep things as simple as possible. However, no matter how hard I try, if you're just a complete beginner, then you might not you might come across some words or some terms which you might not be able to understand. If that is the case, please do comment in the chat box and let me know, and I will go deeper into whatever you're having difficulty understanding, right? So yeah, right. So that's with that out of the way, let's start. Okay, let's jump into the company and let's take a look at the let me just switch the screen. Right now, you guys are seeing my camera, and I'm going to switch to my whiteboard. Okay, now here's the whiteboard, right? Actually, let me go on the full whiteboard, right? So here's the whiteboard, right? The company is basically Warrior Met Coal. Okay, that's the name of the company, and this is a stock that we purchased a while back, some time ago, right? and a few, like maybe a month and a half, 2 months ago, and here is what's going on with the company right now. First of all, Warrior Met, just a minute, Warrior Met Coal, okay, the ticker symbol is SCC, and this is a company which is listed on the New York Stock Exchange, and this company is basically in the business of manufacturing metallurgical coal. Okay, now please understand that there are two different types of coal. The first is thermal coal, right, which is basically used in producing thermal energy, electricity, and right. While the other type of coal is basically met coal or metallurgical coal, right? And this is what Warrior Met Coal is in the business for. The Met is the name of the company is Warrior Met Coal, and the Met stands for metallurgical. Okay, Met, right? So metallurgical means metals, right? So met coal is basically coal which is used in order to. It's a very crucial component of producing steel, right? Metal. Now I'm going to remove the annotations. Now here are the things that here is what this screenshot I took this when we started researching, and back then the company was around $43 or $44, right? In fact, when we purchased we got it around $40, right, per share. Now what happened was that, and if you look at the price today, I don't have the screen on me right now, but I think it's around 53 or 50. It's around. Let me check. Just give me a minute while I check. Right. So Warrior Met is around 60. How much? Yes, $60. Okay. So we got 2 months ago. We purchased the stock for 40. Right. And today the stock is up to $60, okay? $60 per share, right? So basically that's about, how much is that? That's around 50%, approximately a 50% return in less than 2 months, okay? Now please understand that. I like to give a disclaimer that this is not a stock recommendation, okay? Please understand that with stock, I do not give stock recommendation, I do not give stock tips. The goal of sharing this information is for educational purposes only. I'm here to educate you so you are able to think like an analyst and make your own investment decisions. Please understand that I personally never make investment decisions based on other people's recommendations. Now I might if I trust someone in and if I know that they have the analytical skills, financial skills, financial analysis skills to make good investment decisions, I might look into the stock they're recommending, right, or the business or company they're recommending, but I will never make the investment decision unless I've done my own research. Please, I'm repeating this. This is very important for you guys to understand. Just because I'm mentioning this over here, do not go and buy the stock unless you've done your own research and you understand the fundamentals. Okay, because it's very important to understand. Look, let me tell you why. You must have a lot of this is you might be wondering why I'm saying this, and the reason is because if you don't understand the fundamentals of the business, right, and I'll be sharing some of that today, but please understand that financial analysis, it takes a long time to understand, right? There's a lot of details, and especially if you're just a beginner, you might have a lot of difficulty. You still need a lot of time to be able to absorb and to be able to do the analysis yourself. So do not go and buy this stock outright, right, if you don't understand the fundamentals. I hope I'm making myself very clear, right? Now, yeah, and I was also the point I was also trying to make was that yes, I was saying, you know, that if some I never make investment decisions based on other people's recommendations, right? Alone. Now, yes, if I know that someone who's good at financial analysis is recommending a company, I might look into the company, but I'll do the analysis myself, right? 100% I'll do my own analysis and then decide for myself if I want to, if I like the company or not, and if I think that that it is fairly priced before making the investment decision, right? So please remember that, okay? Now, coming back to the screen, stock screen. Uh, Now we purchased the stock around $41, okay, about 2 months ago, less than 2 months ago, and today it's around $60.73, okay. Let me share the screen with you for a minute. Let me just show you the screen, okay. So if you look at the screen, this is Yahoo Finance, this is volume at call, this is HCC, that is the symbol of this. This is the stock's ticker symbol, and if you look at the last closing price was $60.73, right? So this is this is according to the latest numbers, right? To the latest market details. So now. Now, why to share with you guys what got me interested in the company? Let's talk about that. Now, look at and this is the stock at a glance. Okay, if you the screen you see over here, it's a service provider. It's a stock screener that I was using from one of the this is a paid stock screener, stock screening service that I was using. Um, and by the way, if anyone is interested, you guys are welcome to check it out. It's a good service. Although this is not a paid promotion, please understand. But I would recommend if anyone is interested in looking at it. It's basically Rule One investing, right? From a gentleman, his name is Phil Town, right? I would also, you know, if you are interested in investing, go and look him up, right? He's a well-known investor, value investor, right? And by the way, value investing is what Warren Buffett is a style of investing, right? Which Phil Town follows and which I also personally follow, right? Now, with the stock coming back to volume at call, one of the first things you can see on the screen is the 52-week high, okay, and the 52-week low. So over the last 52 weeks, the company had had a high of $75.53, okay, while the low was around $38. So there was quite a bit of there was quite a difference between the two, right? The high and the low, the 2-week high and the 50 low. And so, if you look at the low, you can we were lucky that we in the sense that we basically bought near the low. Okay, so we bought around $41, right? And we bought in multiple on multiple occasions or different points in time. But one of the first buyings, one of the first blocks of investing that we did was at $41, right? So you can say that we purchased the stock at around we purchased the stock at around the bottom, right? 52-week low. So that's of course that's a good thing. Now, removing the annotations. Another thing you can see on the screen is the current PE ratio. Okay, the PE basically stands for the price to earnings ratio. Okay, the price to earnings ratio. Now, this price to earnings ratio, this is basically a relative valuation metric. Basically, in simple terms, if I were to tell you that the price of the stock is $43 or $44, okay, then is it a good investment to buy? Okay, and please understand that I'm oversimplifying, but just for the sake of your basic understanding, right? So if I were to tell you that the price of the stock was $43 or $44, and if I were to ask you, do you think it's a good price to buy at? Then what would be your answer? And please, if you are watching the video, I would recommend you guys pause for a minute, think about it, and then drop a comment in the comment section below. If someone is watching the video right now on YouTube live, so you are welcome to drop a message in the chat, and let's see what you guys have to say, right? But anyway, so if I were to tell you that the price of the stock was $43, then and if I were to ask if this is a good price to buy, then the fact is that you do not have the price by itself alone is not sufficient for you to make a decision on whether the company is fairly priced or not. Okay, is it overpriced, underpriced, or fairly priced? The price itself is not enough for you. Okay, why is that? Because let's say, and I'm going to remove the annotations, right, to help you understand this concept. If the price of let's say this stock is 44, okay, $44. This is HCC or Warrior Met Coal, and let's say there is another company. It's one of the competitors is Alpha Met Resources. Okay, AMR. Okay, this is a comparator company of Warrior Met, and let's say that company shares is around $100. Okay, per share. Now, just looking at these, and if I were to ask you, which company would you buy and why, then the simple answer. Now, many of you might be, might get excited and say, because everyone hears the buy low, sell high. So many of you guys might be might say that the $44 shares is better because it's priced lower. Okay. So others might say that $100 the AMR is better because it's priced higher. Okay. Right, because you're saying that it's priced higher, so it's more valuable. But the answer is, the fact is that just giving you the prices of these two stocks is not enough for you to make a decision about whether you should invest in either of these companies. Okay, why is that? Because the additional piece of information. So if I would answer this in this way, this question is that if someone were to ask me which of these two stocks would you buy and why, then my answer would be that I would my question would be that before I buy any of these stocks, I would like to know how much is each of these company making. Okay, how much are both the companies making in terms of earnings per share. Okay, EPS is called, this is earnings per share. Okay, now earnings per share is basically a critical piece of information that I need before I'm able to move ahead in my analysis, right? Because let's say, and in the case of HCC or Warrior Met, if you look over here, the EPS, right? This is the EPS, earnings per share. TTM stands for trailing 12 months. Okay, that is how much has the company earned on a per share basis over the last 12 months, right? And that is basically $2. Okay, so over the last 12 months, Warrior Met Coal with the ticker symbol HCC has earned $2 per share. Okay, and how much is the price? The price per share is $44 per share. Okay, now if I were to take the price of the stock, which is $44, okay, and divided by the earnings per share, which is $2, then my PE ratio would be $22. Sorry, 22. Okay, not dollars, just 22. Okay. Now, what does this mean? What does the PE ratio actually mean? Okay, and what does it show you? The answer to this question is that the PE ratio of 22 means that for every, because remember, and one more thing before I proceed, please note the price. This is 22 divided by 1. Okay, the denominator is 1. Okay, of course, and in the numerator, remember, in the numerator we have the price, and in the denominator we have the earnings. Okay, so this PE ratio of 22 means that for every $1 in earnings, the market is charging $22 per share. I'm going to repeat that because it's so important. Okay, for every $1 in earnings that the company makes, right, on an annual basis, for example, the market is charging around $22 per share. Okay, so to become the owner, to become the rightful owner of that $1 in earnings from Warrior Met Coal, you need to pay how much? You need to pay $22. Okay. Now, okay. Now we're getting somewhere, right? Remember, the question that I asked was, how would you buy this stock or not if you at $44? Okay. And like remember, I mentioned that if you the price information by itself was insufficient to make a financial decision. So we basically looked for another piece of information, which was the earnings. Okay, the earnings per share. Now, the earnings per share is sorry about that. Just a minute. The earnings per share, now tells us that now the picture is getting clearer. Okay, so I'm going to remove the annotations for a minute. Now HCC has a PE of, if you look at the current PE, look at this, it's around $22, so not dollars, 21 or 0.72 or 22. Okay, we'll call it rounded off, call it 22. Okay, now the P, and of course we know that a P of 22 means that for every $1 in earning that the company makes in profit on a per share basis, the market is charging $22. Now if I were to compare with the other company, AMR, or Alpha Medical Resources, which is Warrior Met's competitor, and which had a price of $100. Okay, the price was 100. Okay, and the EPS was let me check for a minute. I'll just give a minute while I check how much is Alpha Met's EPS. Let me see. Around $2. Okay, it's, guys, this is very important. Okay, I just checked on Yahoo Finance, and let me show you. I'm going to show you guys. Alpha Met Resources was basically this is AMR, Alpha Medical Resources, and if you scroll down, this is Yahoo Finance, and if you look at the numbers, you will see that the EPS for Alpha Med Resources is $2 per share, or 2.404 cents, right? So if I go back to the screen, if I go back to our to the dashboard, to the whiteboard, so the price back then the price was $100, okay, and the EPS was $2. Okay, so that gives us a PE of how much? It would give us a PE of 50. Okay, and what does the PE of 50 mean? Okay, the PE of 50 means that for every $1, remember the denominator is 1 and this is the earnings per share. Okay, this is also the earnings per share, and on the numerator is the price per share. Okay, so we know that for when it comes to AMR, Alphabet Resources, to become the owner of every $1 that AMR or Alphabet Resources earns in profits, the market is charging $50. Okay. Now, please understand, please focus on the terminology that I'm using. All else equal, which it is not, right? But if all else was equal between Warrior Met and Alpha Medical Resources, and right, if everything else, both the companies were similar in every aspect, but the only difference was that their PEs were different, the price to earnings ratio were different. In other words, Warrior Met's PE was 22, okay, and and Alpha Medical Resources earnings per share was 50, okay. Then all else equal, we can clearly see that Warrior Met Coal is the better valued or better priced asset. Okay, it's the better priced asset. Why? Because look, for AMR, for Warrior Met to become the owner of $1 in earnings, you need to pay $22, right? And remember, in when it comes to investing and when it comes to finance, the lower the price you pay, the better. Okay, the more money you make. Okay, so we know that. So on a relative basis, on a comparative basis, we can now see that Warrior Met Coal is a more attractively priced security or asset. Okay, and that is because, remember, if I were to put the PEs of both these companies, HCC at 22, let's say, and AMR at 50, so we can clearly see that HCC is the better priced asset. Or stock. Okay, why? Because both the companies, to become the owner of $1 in earnings for each of the companies, for HCC you have to pay just $22, but for AMR you have to pay more than double. Okay, right? Because 22, if you double it, it's 44. So, but the price for AMR is on $50 per share. Right? Not the price. The price to earnings ratio is 50, meaning that to become the owner of $1 in earnings, you need to pay $50. So, which now we are in a much better position to judge or to evaluate as to which of these securities is better priced. And now we can clearly see that HCC is a company which is better priced if all else was equal. Okay, remember this, please, and remember, all else equal. Okay, if both the companies were the same, were similar in every other aspect, but the only difference was in price, then yes, then the smart thing or the logical thing to do would be to buy HCC, okay, or Warrior Met Coal, okay, not Alpha Medical Resources. Now, please understand. Now, before I'm gonna let me go. Let me go to the camera view. Guys, please understand that the I'm emphasizing, I'm repeating that for all else equal. Okay, I've repeated this multiple times, and there's a reason why I'm emphasizing on it. It's to build is to create an emphasis on it, and that is because the fact is that uh, the fact is that the warrior met, right. Uh, the Just 1 minute, guys. Just give me a minute, okay? I will be with you guys in a minute. Just give me a minute. I need to drop in an important message. Just 1 minute, please. Okay. Okay, guys, we're back. Okay. Now I was saying that between these two stocks, right? If you look at the price, HCC is the better price stock, right? Why? Because the P is lower, the price to earnings ratio is much lower. Keeping all else equal, okay? All else equal, if all else was equal, then Warrior Med or HCC would be the better investment to make, okay? Why? Because it's cheaper. But please understand, it's not always, things are not always, the all else equal does not always apply. In fact, it does not apply most of the time, okay? Why? Because both these companies, although they're in the same field, they're in the same line of work, they both produce metallurgical coal, but the problem is that all else equal, they do not their fundamentals are not exactly the same, okay? For example, I'm going to change the color of the pen. For example, if AMR, okay, I'm not saying it is that way, but just to help you guys understand that if AMR had a higher expected growth, okay, if AMR had a higher expected growth, right, in meaning that in the future the earnings would grow at a much faster rate, okay, then in this case the higher PE, which is basically 50 Alpha Medical Resources has a PE of 50, that would be better, that might be justified, meaning why? Because it has higher growth, okay? Now I won't go into the details with this much details today, but please understand that we will go into more this detail later on, but for now just this is enough, okay? Just today's session I just want to help you guys understand how PEs work, okay? And so one more time, just to revise before I end the session, or we can also wait for you guys to if you guys have any questions, and let me just check if we have any viewers. So we do not have many viewers right now. In fact, there's just one person watching. So but I would recommend you guys, if you guys are watching this video right now, then please feel free to drop in a message, say hello, and if you have any questions, I'll be happy to take them for you, right? But anyway, coming back to this, and please, so I have my the chat open in front of me, the chat side, and so I can see if you guys drop in a message, I'll get the notification. It's right in front of me. So feel free to drop in a message anytime, right? And I'll get back to you, right? ASAP. So now coming back to the topic of AMR and HCC's PE ratio, just to repeat one more time, the higher the PE ratio, the higher the PE ratio, the less attractive the asset compared to a company which has a lower P ratio, all else equal. Okay, if we have two companies, and these two companies, company A is earning less, no, not earning less. If company A has a lower PE ratio compared to company B, which is a higher PE ratio, and all else equal, we should go for company A because the PE is lower. Okay. Now, in the next, I'm going to end this. We just have 10 more minutes left before the stream. Before the stream ends, and so I am going to just. I'm going to wait and see if anyone shows up, and we will go into the. We're going to see if someone has any questions, and yeah, I'll be happy to answer them. All right. I've got my screen over here, my other screen, and I am looking at it right now. Right. So, guys, we've been streaming for about an hour almost, right? Few minutes less, but I don't think there's anyone in chat. I don't see anyone in chat, so I am going to end the session. And please note that I, for those of you who are interested in these kind of videos, I will be sharing regularly 2 to 3 times a week, right? I will be, sometimes even more. I will be going live, and you guys are welcome to join me. And one more time, I've been studying and practicing investment management, or specifically stock investing, for a very long time. And I have been, this is something which is very interesting, is that, and I'm saying this from experience, because I get to meet a lot of, finance professionals, right? And, I get to meet a lot of highly qualified, very smart, brilliant people. But the fact is that not every person who studied finance, right, will know how to make investments by making investments, I mean putting in their own money. Okay, this is one of the surprising things, and you will see and you'll be shocked. You will come across so many highly qualified finance professionals who have I mean, I know so many people, and if you ask them, I have met so many such people, how much of your total wealth, of your total portfolio you've invested in the stock market, for example, and so many of them, a vast majority, will tell you that I do not invest in the stock market because it's a gamble. Now, please understand that these are highly qualified. The reason I bring this up is because these are highly qualified people, right, and they do not know how to invest, right? So, and I'll say something which is which might be very controversial and might spark a lot of controversy around it. But please understand that even this I've got nothing against the credentials. Like, for example, the CFA is a great program, but please understand that I myself am a student of the CFA program. I've cleared the first 2 levels of the CFA, right? And please understand, and I'm not saying that there's a lot of value in it, right? But I know so many people who are CFA charter holder. I'm not even a CFA charter holder yet, okay? I've cleared the first 2 levels. I haven't sat for the level 3. We'll go into that some time. Right? I'd like to discuss that. But for let's actually talk about our topic, because I know that my CFA level 1 group, I've shared this. I share a lot of content for the CFA students, that I personally did not see the value in level 3, because remember that level 1 and 2, again, please understand, level 2 CFA is a great program. I think it's one of the best out there when it comes to investment finance, okay, investment management, portfolio management. But level 1 and level 2 exams, they're aimed at analysts, okay, while the level 3 program is from is for portfolio managers. You just put on a different hat when it comes to level 3. So I was not interested in portfolio management. The reason I got into the CFA program was to learn how to analyze businesses and cash generating assets like stocks, right, and real estate as well, right. So, and I did that. I got the information, and then I did not I did not want to pursue the level 3 because so yeah, that with that out of the way. Now, coming back to the point I was making earlier, that even if you're just starting out, yeah, great. CFA level 1, level 2, go for it. This is some career advice I would give. If you are just starting out, okay, with no previous experience in investment management, and you want to get in, then yeah, great, go for level 1 and level 2, and then especially because it will depend on the market. And although it's not always this is not necessary, but in my experience, right, I live in Pakistan. In my experience, getting into now CFA, at least most of the companies, they have become very picky, choosy about this. Very picky about this. They're very particular. They say you should be enrolled in the CA program, and preferably you should have cleared level 1 or even level 2, right. Back when I was applying, when I was working in the industry, 2012, back then, if you had level 1, cleared level 1, people would pick you up, right. Even today that can happen, but chances are lower because the competition has increased a lot. And so most of the time it's basically now I think level 2 has become the standard in my country, okay. It's Pakistan. So remember that. So yeah, so if you are just starting out, then yeah, it's a great idea to go for the program, because it shows it's a very technical program, right. It's not an academic program. It's a professional program. You will learn what you are going to be doing on the job, right. So there's definitely a lot of value in it. I see it being, 20 or 100 times better than doing an MBA in finance, right. This is my personal opinion, take it for what it is. But I personally think that instead of going for a master's MBA in finance, I would recommend you guys go for the CFA, right. Lot more value there. But yeah, so that's it, guys. I think we just have a few more minutes. Let me see if there's anyone online. If there are any questions, let me see. Just a minute, guys. Any questions? Let me check. Lot more. Okay, no. There is just 1 or 2 viewers, and I don't see anyone commenting. So anyway, I think that I'm going to wrap today's session. If you liked the video, give it a thumbs up and comment in the comment section below, and let me know what you guys found to be valuable, so I can create more content around that, right. Or maybe give me ideas about what else would you guys like for me to discuss, okay, from an analyst perspective. Or from what problems are you guys? Please understand, my channel is basically more my main target audience are basically the beginner investors who are beginning, right? Stock investors or beginner stock investors. So what problems are you guys facing? Do you guys face, right? I myself have been a beginner investor, but that was so long ago, right? That it would be great to get a refresher, right? I do have some ideas about what problem you guys are facing, and I'm going to be making videos based on those those ideas, right? But I would also love to hear from you. What problems are you facing, and what kind of content would you like for me to make, right? So I'm able to add a lot of value for you guys. Thank you for giving me this time of your day, and especially I know it's a weekend, so thank you so much, and I hope to see you guys on my other streams, right? That's it for now. I'll see you guys in the next video. Take care. Bye for now.